on market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Taiwanese index is trading in the green as well. The Kospi is now trading with gains of around 0.5%.
To my fellow citizens, America is back.
Resistance is the 40 hourly, which is 22,302.
Keeping an eye out on BSE because NSE now they've gone ahead and changed the expiry date. So let's see if there is some kind of impact on BSE.
22,120. We're up about 0.18, 0.16%.
They want to get the bond yield down. They want to get the US dollar down, and they want to get the oil price down.
Feel that Monday would be the best day for our expiry.
The US equity markets has to do well for the rest of the world's equity market to do well.
And the markets are surging. We're at the day's high for the benchmark indices. The Nifty is now inching towards 22,300.
More importantly, they would promote steel sectors restructuring.
Midcap index up 1,000 points. So midcaps is where the action is.
In fact, the dollar is dipped more versus the euro.
Well, that was the day so far. Hello and welcome to Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me is Surbhi. Well, Surbhi, it's been so long. To see that kind of green on the screen, 200-point gain, got an absolute drubbing, a smashing before this. But good to see some kind of green on the screen. And a couple of factors, Surbhi, I just want to highlight before you take over. One is we have 350 stocks that are at upper circuit today. You have 180 stocks at lower circuit. So that's good, right? I mean, it's been a long time since you had 350 stocks at upper circuit, point number one. Point number two is today, in all probability, we end the 10-session losing streak, which is something we never ever saw.
10 straight sessions down.
10 straight sessions. And, from 2002 onwards, we have had 9 instances where the Nifty has been on an 8th session losing streak. The good news is 1 month later, 6 out of 9 times we have been higher. So hopefully this time around as well, it plays that way.
Look at the green bands above our head. It's a long time since we saw all green. Nigel singing and all. It's that kind of a day, right? Imagine what the bulls will be feeling today. But it's a huge relief considering the kind of drubbing that our market has received. That we're seeing this. It's global in nature. It's relief that's played out across a lot of global markets as well. And the good aspect is that President Trump didn't say anything further to sort of, shatter confidence in that joint address to Congress. In fact, if anything, the market's still holding on to hope that there will be some negotiation, some back and forth with Canada and Mexico, and maybe some rollback in tariffs as well, because that's what the U.S. Commerce Secretary said. And that kind of has sparked that whole relief move. We've seen that across Asia. European markets have been holding up as well. And right now, if you look at the pre-open, the good news is that even there, the markets are showing recovery, because remember, all this happened after the U.S. close when the Commerce Secretary made that statement on perhaps there'll be some rollback. So looking good. Now let's look at what this means or what this has meant for us here. Nifty has been confidently above the 22,300 mark, and it's not a day where the rallies are getting sold into. That's the other important point. It tells you that some amount of confidence is back, and people are not looking to exit every bounce. I don't want to sort of jinx it and call it too early. But at least for what it's worth, today the green has not gotten sold into. Talk about the winners and losers. It's a wide move across sectors, across market cap as well. On the Nifty, some of the key stocks will come up. Metal names are well. We've got good news from China as well, and we'll talk more about that because in their meetings that are underway, their parliamentary meetings, they're talking about pretty good targets in terms of growth. They're talking about a higher deficit, which could boost the economy there. That's working well for some of the metal stocks. Beyond that, some of the auto stocks are rising. So Eicher Motors, some of the other names like Tata Motors from yesterday, which were all downbeat, they are up and about. Let's pull up the Nifty contribution chart if we can. Everything is actually okay, barring a couple of financials. 2 stocks would be on my radar. One is Bajaj Finance, because there's been very consistent selling on Bajaj Finance right from the morning, and that's not changed, even in such a green scenario. That's the contribution chart. And the other is HDFC Bank, 30 points down. So those are the 2 sort of party poopers, so to speak. But otherwise, it's looking good. Reliance, M&M, Bharti Airtel, you name it, all the big boys are on the green side for a change today, Nigel.
Okay, all right. Well, so it'll be just a couple of other factors. You know, the European markets, they're seeing a big relief rally. So you'll say, well, India is just participating in this entire global bounce back that we have seen. But we didn't participate earlier. So it's good to see, at least on the upside, now we're keeping in step with what the European markets are doing. And the other big trigger, the macro tailwind. You know, two factors I want to highlight. One is Brent crude prices. You know, at around sub $80 per barrel, you're saying that's good. Brent currently is approaching that $70 per barrel mark. That's a macro tailwind. It's very, very good from an India economy perspective and from a market perspective as well. So it's very well behaved, point number one. Point number two is the dollar index. The dollar index just a few sessions ago was breaching that 107, 108. If you take a month, 45 days or so ago, it was 110. That is at around 105. So both these two, you know, the dollar index is an emerging market positive and crude prices well behaved. That's an India macro, you know, tailwind that we're seeing. So good to see. Well, let's find out whether or not there's more in store. Mitesh Thakur joins us on the show. Hi, Mitesh. Good afternoon. A far better day, right? But are we good for more? Or would you say, Nigel, there's been so much pain in the last few trading sessions. You're getting a 200-point bump up. If you went long, take the money off the table.
Good afternoon, Nigel. So I haven't done that. The idea is that getting past 22,150 was some kind of a short-term breakout. The next targets for me now come in the range of about 22,450 to about 22,500, which is where we had the gap down on Friday, which is where the intraday averages are placed. So there's a good chance that we might actually hit 22,450, 500 zone. So till then, I think, you know, managing or trading with clearly a long bias, though 22,150 now should act as a support area. So where you bought futures, I think that's where about 20 points below you can keep your trailing stop loss, and just hope that this rally does extend to about 22,450, 500. Once we start capturing those levels, then we'll look at a bigger reversal. But for the time being, my view is limited to 22,450, 500. On the stock side, I have a buy on Glenmark with a stop at about 1360 for targets of around 1440. And the other one is a buy on Hindalco, and metals as a pack has been doing very well. Hindalco is clearly one which is outperforming the entire metal pack. We had a buy on Nalco earlier. Hindalco now can be bought with a stop at 650 to half for targets of 680.
Okay, all right, Mitesh, got that. Thanks very much. We'll come back to you for some more questions and some more stocks in just a bit. But I'll start addressing a lot of the movers and shakers in the market today. And Nigel, you know, metals. Right from the morning, there's been a fair bit of green out there. So tell us, what's the China connect?
Well, that's right. The metal index is bouncing, and I'm going to highlight three broad points. One is the dollar index. When the dollar index is weak, it's good for, you know, base metal prices. Whether you look at copper, aluminum prices, they are higher. So that's point number one. Point number two is China's NPC meet highlights. They stated that 2025, the GDP growth target is at around 5%. The budget deficit they are talking about is around 4% of the GDP, which will be the highest in the last decade, indicating that there's likely to be more stimulus in the works. They also went on to say that they will encourage private investment, and additionally they are guiding for more private capital to participate in major infrastructure projects. So put all this together, that's positive commentary coming in from China on their economy. They also mandated that steel output cuts to attempt to ease the massive glut that we've seen. This is because of a couple of factors: the collapse in earnings in steel mills, and also there have been acquisitions that China has been dumping the surplus steel all across the globe. Remember, in the last year itself, they had highlighted towards the end of the year that they would clock around 100 plus million tons on, at around 110 million tons in 2024. That's the exports coming out of China. That was the highest we saw in the last 9 years or so. Now, the market is speculating that as much as 50 million tons of output of steel could be chopped off. Lower amount of output in China would mean that there's lower supply in the global markets as well, which in turn will support steel prices. That's about the China piece. Good commentary with regard to boosting the system and potentially reducing steel production. And point number three is the domestic piece. That includes optimism on the levy of duties on steel imports. The street has been waiting for that. And quarter four seasonally strong, right? And that's why the street is working with EBITDA per ton to expand by around 1,000 or 1,500 rupees per ton, because input costs are well behaved, prices are mildly higher, and you'll have operating leverage as well that will play out. So put all this together, the metal index is doing well in today's trading session. Softer dollar index, better commentary coming out of China, which is supported for the global metal space itself, including ferrous. And also point number three is there is that hope that maybe we'll be hearing about those safeguard duties very, very soon from here on. So we'll have to keep an eye out on that front. Well, Mitesh, you spoke about Hindalco. What about the index itself, the metal index? When it's a high beta space, right? When the markets fell, you had metals as well as realty. Both of them fell the most. Now, there is some kind of stability. Do you think metal index can outperform from here on?
So I believe that. I think, I have been positive on the aluminum stocks, but even look at the ferrous or the steel names. I think, Tata Steel and SAIL and disclaimer, I have some positions in Steel Authority of India, so there's vested interest. But both these stocks have shown signs of some kind of bottoming activity taking place, and they've started reversing on the upside. You can add Jindal Steel and Power as well to the entire pack. I think my sense is that metals in the short term will have some more trading upside at least of about 5 to 7%, and therefore that's something which is very comforting given the fact that it's coinciding with the reversal on the indices as well. So I would be very comfortable. I mean, I'm not saying they'll outperform for a very long time, but next few weeks or few days, I think couple of weeks, looks like a good bet.
Yeah, right. And I wanted to ask you about Welspun Corp as well, because that one's at the 20-day. Maybe we'll just get that chart up for our viewers on the screen as well. Welspun Corp, the stock is up close to around 6%. And the point that Mitesh made on JSPL, on the day of the results, the stock got smacked because of the capex worries. I'll tell you what, it's recovered all of those losses. The stock is now closer to around 900 rupees. So this market actually has provided you with opportunities. If I remember correctly, the low that it hit was around 730 rupees. From there on, we saw a bit of recovery on that day itself. The promoter has come in there and put in close to around 6 to around 700 crores approximately. And now there's this optimism that there will be some kind of, import duty that will be, put here, which will get all the companies will gain, and JSPL as well. Just pull up a last, if you pull up a 1 month chart, you'll see that one trading session, it fell down 15%. It was locked. And then from there on, it's seen a bit of a recovery from there. Yeah, that's what I'm talking about. I think a little longer than 1 month. I think somewhere around January 25th or thereabouts. Mitesh, I wanted to ask you about Welspun Corp. That one's up close to around 6%. We were highlighting earlier as well that when Mr. Trump talks about drill, baby, drill, they require those pipes, and the management had joined us here on the channel, and they said they have 25% of the market. So high amount of drilling in the US market will actually be good for Welspun Corp, maybe to a smaller extent Jindal SAW as well. But this one's at a 20-day MA. So how's it looking on the charts?
This is one stock, Nigel, which didn't correct as much, in comparison to the other stocks. But also is the fact that it's a very jagged kind of a pattern, which means that the upsides will not be easy. I think the stock around 700 is a steal, is a great buy. But on the upsides, you will see 800, 820, which were the earlier highs come into play, and therefore the upsides will be limited. So if somebody's holding it out next few weeks, good idea to take profits around 800, 820 and then buy it back on declines.
Okay, all right. Let's, Mitesh, thanks for that. Let's quickly address Lupin. Now, Lupin has been rising in trade. There's a note from Citi that seems to be giving a bit of a favorable view. Let's find out what Citi is saying. Vinny, tell us.
Yes, good afternoon. So a positive note coming in from Citi on Lupin. They've upgraded the stock to a buy from a previous sell rating, increased the target price as well. 2,260 rupees is the new target price. The last target price was 1,900 rupees. Now, what they're saying is they expect the US launch momentum to continue for the company. That is expected to be strong. There are a lot of drugs that the company has planned. The generic side of the business, that is expected to do well. And the continued traction in the non-US business is also something that is expected to do well. That is Citi's view coming in. Now, US sales, they said that they will remain strong. Mainly, that will be driven by the generic Gynark, which is almost a $1.5 billion brand. This is only one generic drug we're talking about, which is a $1.5 billion brand. There are other launches also that is planned. So, a lot of positive triggers that are coming in for Lupin. Other than that, this will be something that will support the margins of the company going forward as well. And to the surprise of most analysts on the street as well, that this drug is expected to continue to support the growth in FY26 and FY27 for the US sales of the company. Tariff side, yes, if that is imposed and if it's not passed on, then maybe that impact could come in on the EBITDA. That will be in the 4 to 6% range, but not of much of a worry as of now. And that is why Lupin has been in focus today. And in this week itself, also, we're seeing that the stock is buzzing in trade. But do not forget, since January, we had seen that fall coming in. And just this week, that we're seeing a bit of an up move starting for the stock.
Okay, so that is Lupin in focus. Let's do one thing. Let's dive a little deeper into the mid-cap surge that we're seeing today, mid-cap and small caps, with a very healthy advance decline ratio. I can't remember the last time we had it this way. Over 2,300 stocks advancing and just about 300 on the declining side. I mean, really, it's a sight for sore eyes, as they say. Let's get that advance decline graph back on the screen. There we go. So some gainers. We've named a couple of those stocks. Metals we've discussed. Lupin is another one. What is also moving higher are a couple of Adani Group names today, by the way. Adani Green is now surging 9%. Adani Energy Solutions about 8.5% or so. There is Coforge, and we'll discuss that with our guests as well as we go forward. Coforge has not only got a big deal, they've also done some small niche acquisitions, and the market's quite pleased with it. So that's one stock that's up and about. Look at CEAT surge, 8% up on CEAT. And it's a sharp surge on CEAT. We'll just get the chart up for you. Also looking very, very good at this point in time. Mitesh, looking at this whole mid-cap and small-cap surge, you've given us one or two ideas for the last hour, but if I were to ask about some positional ideas as well, where chart patterns indicate that at least this could be a trade that runs for the next 2-3 days. Does anything come to mind? Broader market?
So I think, the metal pack, as I said, I think is very good for next few this thing. I'll avoid IT. But apart from metals, I think, a lot of other F&O stocks are also showing signs of reversals, and they would include, stocks like Bharat Forge. Again, disclaimer, I have positions over here. HDFC, AMC, similar disclaimer, I have positions over here. The defense pack, HAL, Mazgaon Dock, GRAC, and I have positions in HAL as well. So I think this looks like a much broader and a stronger reversal, and therefore I'm very hopeful that at least the minimum target, which is 22,455, and on the Nifty should be done, and we might even look at higher levels. But yes, I think metals on the top, and then you have stocks like the ones which I named, Bharat Forge, HAL, PFC, REC, etc., which I think could do very well.
Okay, so Bharat Forge could be another one to perhaps look at. Thanks for that, Mitesh. Take that point. In Bharat Forge, imagine today's a day where you've got a weak Class 8 truck orders data from the US, but the market has been slammed so much anyway that the stock today is not worried about it. And in fact, it's rising along with the overall tide. Let's welcome in Gurmeet Chadha into the conversation. Gurmeet, thank you so much for joining us this afternoon. Great to have you on. Seeing green after so long, right? And so much of green. My eyes can't take it. It's unbelievable almost. But good, really good to see. So, let's take the example of some of these auto stocks, auto component makers, which have exposure to the US. Mitesh was just telling us about Bharat Forge on the technicals. What would you still play here? Because there are so many factors. There is the US exposure per se, where maybe it's a little confusing with tariffs. There's the currency exposure at play as well. So anything here that you would pick, and a specific call on Bharat Forge if possible?
Yeah, hi Surbhi. So I think two ways. I think M&M, in my view, overreacted to the Tesla news, if I can say that, because the numbers month on month, they are gaining market share. SUVs, they are at 23%. Tractors, they have gained another 150 basis points. They have guided for 15% plus volume growth in tractors and farm equipment. And if you see since Hyundai IPO, M&M was 33 times earnings. It's actually come down to 22 times. You had 2 good quarters of earnings, and there's a price damage of 20-25%. So you today get an M&M at about 22-23 times trailing, and probably forward at about 19-20 times. So with very less dependence. There are some export component and some small tractor exports to US, but it's a very small component. Look at TVS Motors, for example. Excellent set of numbers. In a weak two-wheeler month, it actually is now demonstrating that the exports have picked up and across countries, and domestic market continues to do well. iQube sales actually now are almost the leader. They're outpacing the rivals, including Bajaj, Chetak, and Ola Electric. Good balance sheet, reduction of debt. And then, you can have a more contra play that, let's say, Tata Motors is down 40-50% from the peak, 11,1200 to, let's say, about 600 odd levels. So I think more on domestic plays for now, and maybe on a contra basis, you can probably look at, Tata Motors, hoping that, China is reviving. That's a large part of JLR sales. And, this year, hopefully, you will see some restructuring within Tata Motors. So there could be some bit of value unlocking, which also happens, which the group has also guided for. So this way I'm going to play. Bharat Forge we don't have in the portfolio, but we are looking at some auto anchors where the price damage has been quite severe, 30-40%, and the global linkage is less, like something like an Uruminda.
Okay, all right. Got that, Gurmeet. Hi, good afternoon. Good to see you in Gurmeet. What about from the banks and financial space? That's the area where you have some valuation comfort on select names. Some of them underperformed in the bull run. And now I wouldn't say this is the start of a bear market, but and the market's a little bit subdued. Some of them valuation-wise, well, they're quite attractive. Your take?
100%, Nigel. And if you see private sector banks, the ROE is 18% and price to book is almost 2. I think the last time you saw that, I think, was post 2008, and I think around Fed taper. So you're getting even private banks at very good valuations. You're getting PSU banks, most of them below book, except maybe SBI. I was looking at Punjab National Bank; it was 0.5 or 0.6 on an FY27 price to book basis. So there's a lot of value there. My sense is RBI will do more measures, both in terms of, I think this rupee dollar swap has also helped some of the NBFCs and lenders immensely. Then you probably will see more adjustments on risk weights. They've already done that with NBFCs and microfinance. I think more will follow in terms of boosting demand, and the entire bank is at 12p. So I think you can add private sector banks like ICICI, which has been the leader as far as the performance goes, and you can look at some value plays in PSUs like SBI. And I also think capital market plays have seen a very good correction. There's been a good valuation reset. I don't think so the long-term story changes there. So maybe a couple of good mutual funds, because they've come down because of some mark-to-market impact it will have on fees, and some of the plays like CDSL, etc. But this is not immediate. This could be more. Maybe you can have one short quarter before it recovers. So this is more for more for very long term, and I think banks and some good quality NBFCs for medium term.
Okay, got that. Let's pull up Coforge once again and take a look at what the stock's doing. It's up almost 8% last I checked. And Coforge has been really a study and a story in terms of mid-cap IT outperformance. Usually the one management that sounds extremely confident of clocking 50% sort of growth rates. And from the peak, the stock's cooled off quite significantly. In fact, let's pull up a 12-month chart. It'll give us a better perspective. Coforge from the highs is off about 22%. So the damage is not as severe as many other parts of the market, but it is off the highest levels of 9,000 odd, or almost 9,000, which is where the stock was. Now, what's happened today? We'll just get the graphics up on the screen as well. They have talked about a large multi-million-dollar deal, which is going to run into several years. And they've also spoken about 2 acquisitions that the company is going to be doing. And the street's taken good note of that. Gurmeet, your thoughts on the developments and Coforge overall?
No, I think pretty positive. In an environment like this, especially when there is so much of clouds, it was. Plus, obviously there was a corporate action in terms of stock split as well. But I think Coforge and Persistent have been outliers. They have actually relatively done much better, even when IT was not doing well. But only thing is, would you pay 60-70 times earnings right now? I think that's the point, and this is a 13-year deal, right? So while obviously there is a news-based impact, similarly Persistent also is above 50 times. So I'm not negative on that, but incrementally I would rather look at adding names where the valuations have reasonably corrected, something which I can get more at around 20 times, 18-20 times probably in IT services. I think large cap IT to me in this environment gives me a little more comfort. And if, let's say, Europe recovers and, at some point of time we have better data and commentary from KPIT, I would like to watch the quarter. I think that's what this very niche auto play within IT play, right? Which is case corrected, autonomous, shared and electric is the platform. I would like to wait for that. For now, I think I'm good with large cap IT like HCL or Infi for now. And if I get a good price correction in Persistent or something, maybe then.
Okay. One more stock we must check with Gurmeet before we let him go today is BSE. In a market which is looking so beautiful and green, BSE is still sulking. It's down about 3%. And then we'll just play out the sound bites. We had a lengthy conversation with the NSE management to understand this whole issue of changing the rationale and the need for changing the day on which contracts expire from Thursday to Monday. And Nigel, it seems that this is definitely it's careful positioning that they've done. And the rationale seems to be that they're saying that Monday is the best day for them in terms of getting more business.
Well, I was just looking at the breakup, because various notes had come about. And I was looking at it in the HDFC Securities note, where they said that NSE as a percentage of volumes, all the 5 days, it's approximately 20%. But for BSE, what had taken place was on Friday as well as on Monday, that was around 18 to 22% approximately. And on Thursday, it was only 5 to 7% approximately.
Because Thursday, everybody was playing Nifty.
Yeah. So that's why now what NSE is trying to do is they've positioned themselves that they're going to be having that, the expiry on Monday. So they're hoping to garner some volumes out there from BSE. That's a shift from BSE because they have 22% on that day. And on Friday as well, many people will say, I don't want to carry my position into the weekend, so I'll close it off. So then there could be some kind of pulling off
on Friday
also.
Okay.
So that's the broad, broad thesis. We'll have to wait by now to see what BSE does in return. But clearly for the time being, the street has read it, as something that could be a risk to BSE, and that's why the stock is down.
Absolutely. So that's the one important takeaway, the fact that BSE perhaps stands to lose some business now in terms of their Monday offering. The second important question was that what is the need? And what about this competition between exchanges when it comes to deciding their weekly expiries? Because remember, all exchanges can only offer one weekly expiry product now. The management at NSE said that perhaps this is a good time to consider getting all exchanges to look at one common expiry in a week to meet SEBI's objective of curbing F&O speculation. Listen in to the management at NSE. We'll come back and get a view from Gurmeet.
Single day for all expiries in the entire market is the real solution. And so proliferation of weekly expiries on every day of the week through multiple exchanges, like MSCI, for example, has a plan. Likewise, NCDEX seems to have a plan. MCX seems to have a plan. Then there could be OTCI who might come up with a plan. So proliferation of weekly expiries through multiple exchanges is no different from one exchange potentially offering expiries on every day of the week. So perhaps, the solution lies in, one single expiry for the entire market. Responsibility to collectively upgrade and build capacity in the market. Yeah. And if that's the case, then we should be limiting expiries with respect to the expiry day. And you've seen, expiry day shifts being undertaken by other exchanges, and there are also some new exchanges who are planning a foray into equity derivatives to launch weekly expiries. I think it all follows from the SEBI rules, which require only one expiry per exchange. But if the intention of the regulators is to have one expiry, I think it makes sense to choose the optimal day of the week. The rationale for this decision is more to take into account the fact that there are lots of geopolitical events, developments over the weekend, and Monday is a great day to therefore have the expiries.
So lots is happening, the battle of the exchanges. Gurmeet, last 30 seconds left on the conversation. BSE is down almost 28-29% from the peak. Is this a good time to buy, or is this all creating more confusion, this expiry business?
No, I think it should wait because, it's still at 60-70 times earnings. And if you see NSE on unlisted, it's around 40 EPS for 3 quarters. And if you take 52 EPS and you take 1600 at the price, you're still getting it almost half the valuation there. And NSE is pretty liquid to unlisted space. And you'll have a soft quarter. See, in a market like this, look at Polycap, not the right example. Just the announcement of the news led to the fall in the stock because you were at a high multiple. So I think this market right now is not a great time to really venture into something with uncertainty and high multiple.
Okay, Gurmeet, always a pleasure having you on the show. Thank you so much for joining in and giving us perspective on a whole range of issues and stocks. Thanks for joining in. Well, we have to take a very quick break, but numbers tell a story. However, action drives change. The close, the gender gap index reveals where we stand, and the Future Female Forward Charter charts the way forward. Don't miss this landmark moment in the conversation on advancing gender parity and closing the gender gap. Watch it live on CNBC TV18, 10th of March at 5:30 p.m. Welcome back. You're with us on Closing Bell, and green continues to be the color of the day. 250 points up on the Nifty. Aman Chauhan is our next guest on the show. He's, of course, the fund manager at Abacus Asset Managers. Aman, great to have you on. Thank you so much for joining in. So first, let's start with what you've been doing. I mean, just run us through if there are any changes in strategy, portfolio, some profit taking, any churn that you might have undertaken in the portfolio. Given how a lot of the industrial stocks, manufacturing stocks, which is a theme that you folks have liked in the past, where, I mean, a lot of them have also, of course, cooled off in the correction.
Frankly, this will be not much of, you can say, action in the last month or so. Broadly, we thought that anything that we do, buy or sell, would be more of an emotional decision in current times, and we would like to take a more practical, rational decision, just waiting for the markets to settle down. Today is the first good day after a long time. Last 2-3 days, market seems to be stabilizing. So just waiting for 1 or 2 good days like this before we take some action. So as such, last month or so, no major actions. Wherever we were anyway adding to our positions, we continue to do that marginally. No major change per se. Within sectoral, yeah, we increased our financial exposure than what it was a month back. Some of the fringe holdings we have reduced. No new names. Broad decision that would not like to add new names in the portfolio. In case we want to deploy cash, we'll do in the existing names as wherever possible. So that's broadly what has been.
You said that you have reduced some of the defense holdings and added to financials, right, Aman?
Not defense holdings. We don't have any defense names in the portfolio per se. So we never had any major defense name for the last year or so. Fringe holdings, wherever there was a small tail.
Fringe holdings, okay. Fringe holdings. Okay, got that point, Nigel.
All right. Hi, Aman. And good to see you in. Aman, a couple of other questions. What is the current cash levels that you're sitting on? And what about your clientele? Any nervousness out there? The checks are continuing to come in there?
Checks continue, but they are less than what they were 2 months back or 3 months back.
Okay.
Broadly, everybody wants to have a review call. So there's no nervousness per se, besides the select few clients. But whether you're making money or you're not making money, whether you're a 1-year-old client or 6-year-old client, everybody would like to have a review call just to get a sense as to where the markets are, what's it. And I believe the call is equally divided. There are enough number of people who are also asking, is this the right time to further deploy cash or want to increase the exposure? At the same time, there's enough number of people who are also worried that they have seen 20-25% drawdown in the last 2 months, and now what should be the way out? So it's a mixed bag. So far, no major redemptions per se. Yeah, but inflow has slowed down definitely.
Okay, all right. Aman, in the past, I've observed, at times you'll get the cycles very correctly, particularly on the metal stocks. Now, China is upping their game. I understand right now, I'm just looking at my screen, and Steel Mint has reported that steel prices are going to go up by 1,500 to 2,000 rupees. This is broadly anticipated. All of last week, we was hearing this itself, that in March it'll go up. Anything you like, any particular commodity that you like to play in this sort of an environment?
We have a high single-digit exposure to metals. That would be among the top 2 metal companies, and we have the largest stainless steel company in our portfolio. So between these 3-4 names, we have a decent metal exposure. We were quite positive on metals 2 months back post the China stimulus announcement. After that, we turned neutral when the Trump uncertainty set in. So as of now, we are neutral. We are not adding further to exposure, but whatever we have, which is a high single digit, we continue to stay there. Depending on how eventually the tariffs and whatever Trump eventually ends up doing, we'll take a review call. But right now, just holding on to what we have.
Okay, all right. Just to confirm, stainless, that's the obvious choice. And the other 2 metal names that will have the larger ones, both from the ferrous pack or ferrous and non-ferrous?
So it's a lot. It's a multi-metal company which is going to split its business.
Got it.
Aman, as I can see in your all caps PMS strategy, obviously banks are 15%, which is the lion's share. There is NBFCs, which is 11%. But industrials are also, like I was saying, you guys have always liked industrials as a space. What is your thought there now? There's a huge valuation correction that's happened. Stocks that were trading at 90 times forward earnings, 100 times forward earnings, they've cooled off a little bit. But are they at levels where you would top up and add more? Or do you think, a bit of that industrials story is, at least from a market's perspective, I mean, the next run will not be led by industrials? What's your sense?
See, the super expensive industrials, which was like 70, 80p, they were never in our portfolio. That 60p in this correction has become 40p. 40p, frankly, still not an entry level P, right? So those names were still off our, you can say, radar. They still continue to be off radar. Another 10-15% correction, maybe then we start looking at them. Whatever exposure that we have would be predominantly mid-size industrial companies. They could be like cables companies, wires company, some, you can say, capital good company, engineering companies. That's bulk of the exposure that we have. That space continues to look good, especially because you see the government spending has come back, right? And when you start seeing the monthly numbers, the January numbers, the IEP numbers that are coming, they are all showing an uptick. And I'm expecting a good, you can say, order inflow from the government for the EPC side also. So putting all these things together, I think that segment looks good. This was a market performer or slightly better than market performer over the last year or so. Defense, railways, PSU is where the momentum was. In the next round of rally, whenever it happens, next 3 months, 6 months, we don't know. But whenever it happens, maybe there will be a sector rotation. Industrials stand a fair chance, along with financials, to be leading that, you can say, rally.
Okay, so you're saying maybe industrials will still get lots of attention in the next move, the next rally that we start seeing. You mentioned cable and wire, so I have to ask you this question, right? There's a big conglomerate entering the space, and it caused quite a flutter in the stocks, and there was a conference call, and now it seems that, they're not going to be too aggressive, but still, I mean, it's the Birla Group. So, what is your sense on it? I mean, are you worried about some of those holdings right now? Just looking at what happened to the paints side of the market when the same group entered paints.
Right. So, not too worried, at least in the near term. In the next 3-4 years, 5 years, yes, there would be a competition, but by that time the industry would also have been grown. So effectively, the market share that they are targeting is 1 year growth for this industry. So hence not worried. We are also not drawn a parallel with the paint sector. I know from where you are coming. See, in paints, the demand also, you can say, normalized, or it was like a low single digit to a volume degrowth with the paint industry saw, and that was one of the major reasons for the PE derating to happen. It was not just the Birla entry, it was the whole volume slowdown and degrowth also in some quarters for the overall paint sector. That is not the case for cables and wires as of now. Demand is strong, order book is strong. Next 2 years, there is decent visibility. Because of solar and renewables, we are seeing increased T&D spend happening because one has to strengthen the grid dimensions have to change and so forth, right? So I'm not too worried that it's going to be a significant derating the way it happened with the paint sector, just because the growth rate is holding on and is expected to stay strong, at least for the next 2 to 3 years.
Yeah, I only asked because I think maybe Nigel will agree, because every time there's major disruption, all companies tell you that there's enough demand. It's a big sea out there. Everybody can go and fish.
Yeah.
But then the paints example just kind of, put memories, kind of made memories a little jittery.
The core difference between paints as well as cables and wires is that in the paints business, there were 5 players that had 90% of the market. Here, there are 5 players who have 50% of the market.
So large
While in paints, you had 1 player that had 55% of the market. In cables and wires, you have 1 player that has the highest is around 17%. So the short point is it's a far more fragmented
market.
That's what. Aman, I wanted to ask you about that point that you were adding financials, the only space where you'll have added exposure. What have you added? Because I'm seeing that you have a housing finance company in your portfolio. You'll also have the larger banks, HDFC, Axis Bank as well. So what have you added?
So we added more in the private banking space, and we've added to the existing exposure to the NBFC. So wherever there was a price correction, we added to the existing names. We're not taking any new exposure per se, but yeah, overall exposure would have gone up because we averaged ourselves in this correction.
And on your pharma portfolio, you're not too worried about what Mr. Trump is saying?
Not yet. If one has to worry about Trump, then you are worried for the whole portfolio because it looks like he wants to put anything and everything that America consumes. So just waiting out to see as to what eventually happens. What is more worrying right now is not just what Trump is planning, is also that how the world will retaliate. It cannot be that you have a 25% tariff on a China or Canada or anybody else and they'll be sitting idle saying thank you, right? So they are going to retaliate, whether by countermeasures, by counter tariff or something or the other, right? that I don't think market is yet prepared. What market is still focusing is what Trump is going to do. We need to also focus as to what response others are going to do once the Trump is done, right? So for that reason, maybe in the near term, global volatility is one of the big risks for the Indian markets.
Right. Aman, and it's I wonder whether or not he can hold on to this stance of putting in tariffs, because you're going to hurt yourself, right? The US economy is going to get hit. GDP is going to get hit by 0.5%. Inflationary, it's going to be in nature. The Fed won't be able to cut. So we'll have to see whether or not it's just a negotiating tool, or in fact, President Trump is going to stick to these tariffs and put the entire global economy and global markets in a tizzy. Thanks a lot, Aman, for joining in. Always a pleasure having you on the show. Thanks a lot for giving in your insights. Well, it's around 3 p.m., so it's the time of the day when Nimesh joins in to tell us what is he picking up on D Street Chatter. Nimesh, what's the flows picture?
Sorry, Nigel, I didn't hear you properly.
What's the flows looking like, Nimesh? It's a good-looking market. It's a bounce from oversold levels, but what's the feedback you've got and how are the flows?
Well, Nigel, from a flow perspective, the selling still continues, but the indication is that the selling is getting absorbed, and that probably explains why you're seeing a bit of short covering as well in many large cap names today. Look at the Adani Group stocks. All the Adani stocks in the F&O are at 10%, 8 to 10% higher. So clearly looks like there is a bit of short covering rally there. Again, broadly there is a bit of a recovery from the extremely oversold levels. And I've been saying for the last couple of days that there is a bit of buying happening, nibbling happening, and some bit of confidence seems to be back from the larger HNI investors as well. And that's clearly showing up, right? The Nifty in the last 2 days is up 1.5%. The Midcap index is up almost 5% from the very recent Monday low. So clearly there is a bit of a recovery happening across the board as well. Monday, if you ask anybody, there was so much of fear that people are talking about 21,800 as a next big support on the downside. Now people are talking about 22,800 as a first resistance on the upside. So in 2 days itself, you've seen a bit of a change in sentiment and mood as well in the market. So that again, that one level on the upside needs to be watched very closely. From a sector point of view, today seems to be the sector for metals. You explained nicely as to why there is a bit of tailwind for that entire sector. The metal index is up nearly 3%, and the buying in select PSUs continue. So I've been saying for the last couple of days that for some reason there is a bit of interest back in the PSU names, and that's showing up in the indices as well. Not only at the index level, but even in individual stocks, there is a bit of recovery in the PSU names. So again, just to reiterate, the flows are still mixed, but the selling is getting absorbed. And now there is a bit of short covering rally as well, which is playing out in many large cap stocks.
Okay, all right, got that, Nimesh. And after a while, we don't have to worry about that. The only support, which for the last few days was 3:30 p.m. But tell us, what about individual stocks? What are you picking up?
So in terms of individual names, Nigel, the first stock is IndusInd Bank. In a trending up market, that stock is under pressure today, despite some small buy flows at F5 days. Some buying has resumed, but still the stock is down almost 1.5%. The key trigger or the catalyst for IndusInd Bank in the very near term is the reappointment of MD and CEO. It's going to be a binary event, we don't know, but the deadline for the appointment comes to an end on March 23rd. So maybe from here till 23rd of March, you will hear from the regulator on what the stance is. So the reappointment is going to be very critical and a big catalyst for IndusInd Bank in the very short term. So that's the first name. Second, couple of stocks where there is delivery-based buying, Varun Beverages as well as on Interglobe Aviation. Both are seeing delivery-based buying from larger FIs. And remember, for Varun Beverages, for the last 2 days, you're seeing some upgrades as well from brokerages after the recent correction. So a bit of buying there. The third stock is Jio Financials. This is interesting. Today you've seen a bit of a rally in that stock as well. But yesterday there was massive delivery-based selling, and stock almost was at 52-week low, and then you've seen a bit of recovery today. I guess the large part of selling is over, and also in the last couple of days, some domestic funds have nibbled into Jio Finance at lower levels. So that's the feedback. And the last one is NTPC. Even that stock is buzzing in trade up 3% in line with most of the PSU names. But for NTPC, there are sell flows and aggressive sell flows is what I understand from larger FIs. So while there is a bit of rally today, it's been used to sell into this rally by larger FIs.
Okay, all right, got it. Nimesh, thank you very much, as always, for all the buzz and the action from the street. We do have to take a very quick break. As we take the break, here's some good news coming in for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles, and financial world updates at your fingertips. You can download the app from the Apple Store or from Google Play. You can even scan the QR code that is on your screen.
Welcome back. Well, the markets continue to hold with good gains. The problem today, I think, is the Nifty Bank is actually doing a relative underperformance. It still continues to be in this band of 47,500 on the downside and 49,000 on the upside. Mitesh Thakkar is back with us. Mitesh, what's the trade? Fresh couple of picks you have for us?
So, Nigel, Indian hotels is something which I would recommend as a BTST kind of a trade. BTST here, keep the stop below levels of 750, look for a target of 766, 767 for tomorrow. And Jindal Steel and Power, we talked about metal earlier as well. So Jindal Steel looks to be a good BTST with a stop at about 888 for targets of 910.
All right, thanks a lot for that, Mitesh. Well, you know, Indian hotels actually on the day, I think towards the end of last week, on the day the markets were down as well, it managed to end in the green, and it also had solid delivery-based buying. So it seems the street is picking and choosing the themes that it likes. That one up close on 5.5% today. Slip into that break, come back. We'll continue with some fundamental analysis.
Trying to get over it is where today we have a lot of those mental issues that have taken a hold of sport. So many people with mental health issues and so on from sport, because it is the highest risk startup ever that I've ever seen.
I also want to talk about film with you and the James Bond experience.
Yes, the Broccolis were watching me play, and they had tested over several hundred people for the role. They didn't fail. They came up with the right person. They asked if I would do a screen test. And I said to myself, you know what? Who can say they worked at Pinewood Studios in the morning and played at Wimbledon in the afternoon? Everyone has an inbuilt resilience in them, and a determination, a dedication, a discipline, a desire that is burning in there, and we just have to find it. Male, female, young or old, doesn't matter, and you can find it at any time. Muhammad Ali and I were appointed by Kofi Annan when we worked together as a messenger of peace for the UN. He said, the service you do for others on earth is the rent you pay for a room in heaven. The commitment from the athlete needs to be total. Forget about your friends, forget about your education, forget about your family, forget about everything that you like in life. And when you're 17 years old, boy or girl, you can't have another girlfriend or boyfriend.
Hi, Mayuresh. Mayuresh, I'm going to ask you about, are you tracking Reliance Infra, Idea Forge, Reddington?
No.
Okay, which one you want to talk about? Because these are, I thought, some chakri items, I'll ask you about. Which 4 minutes to go to the end of today's trading session. Markets at the day's high, the rupee as well at the day's high. It's been a good trading session and we're holding on to gains. The key highlight though today is that you're going to have close to 10 stocks that are advancing for one stock that's declined. And it's been a long while since we said that. Mayuresh Joshi is with us. Mayuresh, good day to give us a couple of stock ideas. I believe you're looking at Avanti as well as Abbott. Run us through the rationale that you're positive on both these two names.
Yeah, absolutely, Nigel. No, absolutely, yes. And if you probably look at the construct, right, the assumptions of tariffs, specifically Trump tariffs on pharma, has affected the sector as a whole. But Abbott India, generally, I think a large part of their revenue pool comes in from India. In fact, 98% of their overall revenues come in from India. In some of the drugs that they are manufacturing right now, obviously there has been some element of domestic competition, but there is expectation that there will be far more new launches that come through in the next few quarters, which should support mid-teen revenue and profitable growth. And the premise in terms of earnings probably remaining very strong and stable with better pricing, new launches should probably persist. From a balance sheet perspective, as far as Abbott India is concerned, you're probably looking at an almost debt-free balance sheet. You've got ROEs in excess of 27, 28 odd %, EBITDA margins around at 28 to 29% mark, and ROICs which are around 50 odd %. So I think it gives us sufficient space in terms of solid earnings pedigree, EPS, RS rating, institution holding. The parameters we see in Cancelim are probably getting fulfilled by Abbott. And again, around 1.5% of dividend, which probably also means that dividend yield acts as a strong support. So Abbott India is something that we keep on our watch list. The other idea is Avanti Feeds. Our take here is numbers have been exceptionally good. The expectations from the management as far as pricing is concerned when it comes to shrimp exports, the input costs as far as shrimp feeds are concerned, I think both of them probably are looking in a positive direction. The expectation again, and if I have to peg this again from tariffs as well, what really is happening in terms of the duties that Avanti Feeds pays compared to Vietnam, Thailand, China, and even in Ecuador is lesser and significantly lesser compared to these countries. So even if Trump tariffs probably go higher in this aspect as well, Avanti is already quite well shielded. And in fact, it will become far more competitive with a lot more exporting countries at play. Pricing, volume growth, management sounds very positive. And the expectations in terms of overall volumes as far as shrimp exports are concerned should probably improve in the succeeding few quarters as well. So I think a couple of stocks where EPS RS rating looks very attractive to us investors.
Okay, all right, Mayuresh, got that. Mayuresh, in terms of Bajaj Finance and the selling that we've seen, I don't know, would you read anything into it, or is it maybe just some churn, some technical factor? I'm not quite sure. What's your call on the stock?
Afternoon, Subi. No, again, I think there has been a newspaper article where they're saying a large part of the NBFC pool probably needs to look at its overall book in terms of revolving credit as well. And that's where I think the beating down of a large part of the NBFC pool has largely happened. But if I look at the construct, Shriram Finance within the space looks relatively better placed to us at this juncture. Very close to the pivot that we are watching. Again, I think very strong EPS RS ratings as we see it. The overall pool, Surabhi, for Shriram Finance in terms of personal loans is just at 3.4% out of the 250,000 overall AUM book that it probably carries. The expectations in terms of asset quality pressures on the overall book, including commercial vehicles, MSME, farm equipment, personal loans, two-wheelers, expected to come down as rural economy recovers quite smartly. rural portfolio is almost half of the overall book, semi-urban is 25%. And therefore, as these large parts of sections of the market start improving over the next few quarters, the sequential improvement in terms of reported numbers should start coming through. And in any pattern, I think asset quality pressures are going down. ROAs are close to 3%, ROEs are close to 16%, which gives it a very, very healthy pedigree. Again, asset quality, along with capital adequacy at 20% as far as Tier 1 is concerned, should support balance sheet growth. This is one stock outside which is finance, if you probably want to.
Okay, all right. Stay with us, Mayuresh. We'll want to hear you out even in markets forward. But for the time being, I just wanted to first pull up ITC. That one has spiked up in style in the final minute of trade. So big up move is what we are seeing on ITC. The stock was more or less flattish till around 2 p.m. or thereabouts. Big gainers on the Nifty. Adani Ports, Tata Steel, Adani Enterprises, Power Grid, rocking away. More than 4% gains on all of these names. Towards the end of trade, you had ITC. That stock, in fact, did spike up. Sector of the day could be metals because you had the dollar index that cooled off, and also you had the Chinese stocking up the markets with regard to demand, cutting on production as well. Who was in the red? Few stocks in the red today. Actually, the outperformer, Bajaj Finance, took a bit of a breather. That stock was down 3.5%. IndusInd Bank as well was down close to 1.5%. And because you had IndusInd Bank and HDFC Bank that were down in trade, that's what led the Nifty Bank to actually underperform. But should be, you can pick and choose and talk about some sore points. Solid trading session. The bulls will be breathing a sigh of relief. The Nifty goes home with a rocking 265 points gain. And the broader markets as well, rocking along.
Don't want to nitpick at all. It's a beautiful looking screen after a long, long time. And if we can have some of these days, I mean, a couple more, then confidence will indeed start coming back. For the time being, it's curtains on this edition of Closing Bell. Many thanks for watching. We'll take a break, and then Vinny and I will take the action forward on Markets Forward.